Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so yes, of course, we're watching Bitcoin and we're watching the markets, but we're also keeping an eye on those virus and vaccine headlines.
Yeah, that's right. Look, we covered this a lot today because there was news over the weekend about the AstraZeneca vaccine in South Africa. And it was a little disconcerting, but I got to tell you, we are still getting some good news as well when it comes to vaccines.
Yeah, and this is why we're so glad that there's multiple vaccine initiatives. All right, we're going to get to that with the CEO and co-founder at Incredible Health in just a moment. Back to, though, your top business stories and Charlie Pellet.
Hi, thank you very much. Incredible day for Bitcoin. You were alluding to the surge. They're up now by 13.8%. Bitcoin at 43,074 for Bitcoin. You mentioned vaccines as well, and South Africa will temporarily halt the rollout of AstraZeneca's vaccine and accelerate its supply of shots from Johnson & Johnson and Pfizer after a trial showed the shot had limited efficacy against a new variant of the virus first identified in the country late last year. AstraZeneca shares, they are up today by 0.5%. Johnson & Johnson, little changed, higher by less than 0.1%. As for Pfizer, it is down now by just about 0.4%. President Biden has said it's unlikely the U.S. will reach herd immunity before the end of the summer because of a shortfall in vaccine availability. And one of the issues for those administering COVID vaccines is what happens when you have shots left over? How do you make sure those don't go to waste? Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
If every day you have 20 extra, then you have to plan a little bit differently, and one of the tactics that clinics use is they might invite a few more people, knowing full well that they'll have a few extra. Another approach is to have a bit of a backup plan, so people might be there, kind of standing room only, waiting, or could easily be called in. But I think the idea is to find people who still meet the criteria rather than, running around and just seeing if you can grab someone in the hall.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Again, on the vaccine stocks, Pfizer shares right now down 0.3%. BioNTech out of Germany up 1.6%. AstraZeneca up 0.4%. Moderna up now by 4.8%. Johnson & Johnson, little changed, up by less than 0.1%. Longest rally for stocks since August, with the S&P up 14 today, up by 0.4%. Part of it having to do with optimism about vaccines, also rising prospects for a robust federal spending package. The Dow up 140, up 0.5. NASDAQ up 68, also up by 0.5%. 10-year up 2/32, 10-year yield 1.15%. Gold up 1%, 18.32 the ounce, spot gold there, and silver up now by 1.9%. Crude, West Texas Intermediate up 2%, 57.98 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So a bunch of things going on when it comes to the virus and vaccine. Tim mentioned about AstraZeneca, South Africa, temporary halting the rollout there. New York City indoor dining is going to resume on Friday, 2 days earlier than planned. And we are seeing, Tim, coronavirus infections continuing to slow across the globe. India, though, some good news, reporting fewer than 100 fatalities for the third day in a row. And I know they've been struggling.
Yeah, and even more locally here in New York, indoor dining is going to resume Friday at 25% capacity, and middle schools are going to reopen on February 25th.
Which is really, really good. I know a lot of parents have been hoping kids could get back to school. Global cases, though, exceeding 106 million, deaths passing 2.3 million. More than 131 million shots, though, have been given around the globe. Let's get back to a guest, someone who has come to us several times throughout the pandemic, is Dr. Iman Abuzaid. She is CEO and co-founder at Incredible Health, and her company, just a reminder, connects hospitals with nurses and other healthcare workers. She is with us once again on the phone in San Francisco. Dr. Abuzaid, nice to have you back here on Bloomberg. How are you? And tell me what you're seeing from day to day when it comes to the virus and cases and hospitalizations, and then what you're seeing in terms of the vaccine rollout. Have most of the folks that you've seen that are healthcare workers gotten vaccinated?
Yeah, I'm doing well. Thank you so much for having me.
Yeah.
So what we're seeing in our data and with interacting with our customers, over 300 hospitals and health systems use our software to hire nurses in permanent roles across the country, And what we're seeing is actually the majority, over 75% of the nurses in these permanent roles have already been vaccinated, which is great news. But the real question is, like, how come it hasn't been 100% yet, right? Because that's what we really need to get to. And there seems to be two factors. One is the supply shortage that your team has just mentioned. The second factor, which is a little bit more nuanced, is there is still some fear among healthcare workers about taking the vaccine. A lot of that has to do with, quite a lot of distrust has built up between healthcare workers and their employers and healthcare workers and the government when it comes to management of the pandemic. There's still a subset of workers that are pretty resistant to mandates, and there's just some distrust out there. And so I think probably the biggest factor we can do over the next few weeks is explaining clearly the research behind the vaccine, just a little bit more detail on it to get more healthcare workers comfortable with it, so we can get to the 100% of them vaccinated.
How are the nurses doing in terms of workload? And we heard so much early on in the pandemic about so many of these healthcare workers just being overworked and exhausted, and there were so many stories about that. Has that eased up as hospitals have, I don't want to say, gotten better, because in different parts of the country at any given moment, different hospitals are experiencing different things, but as the pandemic has worn on?
Yeah, no, unfortunately, that has not gotten better.
Wow.
If anything, it's become more widespread throughout the country. In the beginning of the pandemic, March last year, the emphasis was really on the Northeast. But now at this point, we're talking February 2021, the pandemic is widespread throughout many states. And so every single hospital and health system we work with is reporting staff shortages, severe staff shortages, difficulties in getting enough staff to fill these units, because, there's a very high patient demand that's been caused by the pandemic. And then what nurses are reporting is over 2/3 of them are reporting high anxiety, high stress related to the pandemic and related to being overworked.
Yeah.
So unfortunately, it has not eased up yet. But hopefully, as cases go down and number of hospitalizations go down over the next few months, we're hopeful that things will get a little bit better.
Are you feeling, just got about 25 seconds left, are you feeling like maybe by summer things start to feel quote unquote more normal?
That really just depends on how the community reacts to the vaccine and how quickly the vaccine rollout can be. Right now, there is a lot of frustration from healthcare workers towards their local communities who are not necessarily following guidelines, mandates, masks, so on, and it's just putting more healthcare workers at risk. So hopefully, the public health messaging will get better and will be accepted by communities, and that's really what this is going to hinge on.
All right, going to leave it on that note. Hey, Iman, nice to have you back with us. Dr. Iman Abu-Zaid, CEO and co-founder at Incredible Health, joining us on the phone from San Francisco. It definitely feels like we're making progress, but...
Yeah, it was really surprising for me to hear that it hasn't, the workload hasn't eased up for these healthcare workers.
Yeah, it's still pretty tough on them. All right, let's get back to world and national news. Over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. Well, the UK variant of the virus is spreading here in the U.S. Dr. Anthony Fauci addressed it today during the White House task force briefing.
It could become dominant by the end of March. That's the sobering news. The encouraging news is that the vaccines that we're currently distributing right now are quite effective against that particular variant.
Federal officials say they're discussing the possibility of requiring all travelers on domestic flights to provide a negative coronavirus test before boarding. Republican Congressman Ron Wright of Texas, who had battled health challenges over the past year, including lung cancer, has died more than 2 weeks after contracting COVID-19. He was 67. Mounting housing bills are still casting a shadow over the U.S. recovery.
About 5 million Americans couldn't make the rent or pay their mortgage in December. That's according to a survey from the Mortgage Bankers Association's Research Institute for Housing America. The study also finds another 2.3 million renters and 1.2 million mortgage holders think they're at risk of eviction or foreclosure within the next 30 days. Those numbers are better than they were in June, but the 5 million who didn't make their payments at the end of last year still account for more than 5% of the rent and mortgage market in this country. In Washington, I'm Nathan Hager, Bloomberg Radio.
2 in 3 Americans approve of President Biden's handling of the coronavirus pandemic. That's according to an ABC Ipsos poll. The survey also shows widespread support for his efforts to pass a relief bill. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massler along with Tim Stanovic. We're going to talk about some of the virus and vaccine stories. Did you see this one by Jonathan Levin? The COVID strain that swept the UK, circulating the most in the Super Bowl state. We're talking about Florida.
It's important, I think, to keep an eye on Florida over the next couple of weeks to see if there is anything that comes of that.
Right, exactly. And apparently it's the variant known as B117. 201 infections identified overall, according to CDC data. It's also the worst state on a population-adjusted basis, followed by Wyoming, Colorado, Connecticut, and California. The U.S. has reported 690 cases of that variant across 33 states. So this is which variant is that?
There are several different variants, of course. There's
one?
There's one that's circulating in the UK. There's one that's circulating in South Africa.
That's the UK one. That's the UK one. That was its scientific name. In the meantime, we're starting to open up here in New York City.
Yeah, that's right. We learned earlier today that New York City indoor dining will resume Friday at about 25% capacity, and then middle schools are going to reopen February 25th. I got to tell you, I was thinking about this. I think this is more and more people are getting vaccinated.
Right.
So if look, I'm not telling people what to do by any means, and this would not necessarily be my behavior.
Yeah.
But I could imagine somebody who's been vaccinated and, going with their partner who's also been vaccinated and saying, hey, I feel comfortable going to a restaurant.
Right, exactly. And listen, I think about restaurants too that have been hurting. Like Valentine's Day is a big one. And you're right, people are getting vaccinated, so that maybe we need to start opening to get a feel of how things go. And you're right, because we do know vaccinations. How do you feel about school?
Oh, I mean, I think that schools need to have students. I mean, schools need to be. I don't want to be too opinionated, right? But seeing what's happening with kids right now,
it's hard
across the country, and it's just heartbreaking.
Yeah, and I hope teachers are able to access vaccines, and I know that they're trying to get teachers vaccinated. But listen, none of this is easy. None of this is black and white. It's definitely very tricky. And meanwhile, get ready for it to get really cold in New York.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P 500 Index trading at a record after comments by Treasury Secretary Janet Yellen that the U.S. can return to full employment in 2022 if it enacts a robust enough relief package. S&P up 13 right now, just about 0.4% higher. Stocks, by the way, posting the longest rally since August. The Dow's up 141, higher by just about 0.5%. We've got the NASDAQ Composite Index up now at a record, up 69 points, up 0.5%. 10-year up 230 seconds, 10-year yield 1.15%. Gold up 1% right now at $18.32 the ounce. Silver is up 1.9%, and West Texas Intermediate crude up 2%, $58 even now a barrel on WTI. After the bell, we'll be hearing from Chegg Inc. Chegg shares little change, down 4 cents right now. Take-Two Entertainment up 2.1%, and Simon Property Group up 2.2%. And that is a Bloomberg Business Flash.
Thank you, Charlie Pellet. February is Black History Month, and throughout the month, Bloomberg Radio is celebrating pivotal moments in U.S. Black history. Here with more is Bloomberg's Renita Young.
On this day in Black history, Oprah Winfrey becomes the first African-American woman to host a nationally syndicated talk show. It started out as a local show called AM Chicago in 1983. And on February 8, 1986, the Oprah Winfrey Show officially launched nationally, eventually becoming the highest-rated television program of its kind in history. It aired from Chicago until 2011 and grossed more than $6 billion during its 25-year run. Now, Oprah is well known as an entrepreneur and philanthropist. She famously gave away a car to every audience member in her show one day, opened the Oprah Winfrey Leadership Academy for Girls in South Africa, and officially joined the Bloomberg Billionaires Index in 2018. She now leads the Oprah Winfrey Network, jointly owned by her Harpo Studios and Discovery. That's today in Black history. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. It's a real-world illustration of a venture capitalist fantasy about the future of media. We're talking about the tiny tech startup Substack that's reaching existential scale in the media industry. So writes Ellen Hewitt. This story is really interesting. I didn't know about them.
You didn't know about it. It's. We're going to let Ellen and Joel talk about it, but
yeah.
It's mind-blowing how much some of these writers make, over $1 million a year.
Pretty remarkable. So she writes about it for Bloomberg Business Week. Let's get into her story. She is startups reporter Ellen Hewitt on the phone in San Francisco, along with Bloomberg Business Week editor Jill Weber on the Access line in Brooklyn. First of all, how did this come to your attention, or how did you guys think about you wanted to put this in the magazine?
Well, it's been a business that has really caught a lot of people's attention very quickly, in part because of those numbers that you just mentioned, and because of the potential. And this is, what I love about it is that it's this company that's effectively invisible, and that was one that we sort of just asked Ellen to kind of take a look at, and she being the amazing reporter that she is, came back to us with a fully realized idea, which is the best part about working with people like Ellen at Bloomberg. But the thing that has really struck everyone with it is this invisible company that is basically taking over the software that generates a lot of the emails that you probably receive without even realizing that they're really the company underpinning it all. So Ellen, rewind the clock. What was the opportunity that Substack saw and set out to capture?
Yeah, they launched in 2017, and it's been actually kind of a really slow growth until I would say early 2020 or even mid 2020. They did exactly what you were explaining. They saw that there were a few independent writers out there, including a guy named Ben Thompson, who runs a very popular tech strategy analysis blog, who were doing writing independently, and they had an audience of people who were willing to pay for access to this writing. So really subscribing to individual writers rather than subscribing to the Washington Post or to Bloomberg. And they thought, okay, well, if we just make the tools to build these sorts of individual independent writer mini businesses, we can make it easier for any writer to make that jump, and then we'll just take 10%. So it's really simple. And then basically what they've had to do since then is recruiting. They've been, in some cases, aggressively recruiting some of these top writers who have, kind of distinct and very engaged followings, and trying to convince them, hey, you should leave your cushy magazine job and come write for Substack, be your own boss, run your own newsletter, and you can make a lot of money. And in some cases, some of these writers are doing so, although in my estimation, many are also not going to make that much money doing it. But it is this very interesting kind of unbundling of writers, individual writers, and bylines that you might follow away from the legacy publications that they might work at.
So, Ellen, as you note in your story, other companies have taken note of Substack and are trying to do what Substack is doing. Twitter bought Review recently. We learned recently that Facebook is working on newsletter tools, according to the New York Times. Can Substack survive that kind of competition?
Well, it's a great question, and yes, there were even rumors in the fall that Twitter was maybe going to buy Substack, and the Substack co-founders were like, "That's not true at all." And then, of course, they bought a competitor, and as you mentioned, Facebook looking into this, and look, this isn't that hard to replicate. Like, what Substack is selling is the convenience. They're saying basically, just come to us, give us 10%, but we'll make it so easy for you to set this up. And maybe we'll send, some new readers your way, but that part hasn't really been realized yet. So their big concern, as I imagine they think about all the time, is that if you run a newsletter on Substack and you have, tons of followers who are paying you money, at some point you're going to stop and think like, man, there are free versions of this out there that require more work to set up. Then I would get that last 10% for myself rather than handing it over to a platform. So they're going to have to make sure that they make it valuable enough that people are going to stay, especially when their followings get really big.
So, Ellen, what to me is most interesting about the Substack story is not only, suddenly it was like a business model that like was in the right place at the exact right time, and here we are in the pandemic, and they're able to monetize and scale really quickly. But also, I mean, it's a little bit of a throwback. We're talking about email and newsletters. Like, is email really the future of media? Because that's effectively what Substack's bet is.
Yeah, and they have this very interesting take on all this, which is if you look at the way that they present their business, they're very anti-engagement. They feel like the reason that we have all this horrible, like, misinformation, polarization, like horrible sort of division in our country from, that's expanded on the internet is because of the social networks' desire for engagement, that they're always looking for people who are going to engage more with content, and that most engaging content is divisive or misleading or anything like that. So they're like, look, we're kind of like the Zen, quiet alternative. Like, you just pay for quality. No part of our algorithm is based on engagement. You're just signing up for these writers. And so I think they would probably embrace this idea that they're going back to something older, because in many ways they're trying to position themselves as different from what has led to our current climate. And so when they saw that Facebook and Twitter were dipping their toes into the newsletter business, one of the co-founders, Hamish McKenzie, who we kind of profile in the story, he said, this is kind of like Shell trying to say that they're going to build, like renewable energy plants, or they're just saying, he's just trying to say that it's not in their DNA to build something that doesn't rely on engagement. And so my guess is they would actually kind of embrace that characterization. I don't know if people are ready to have their inbox be the place where they're getting all this news. And in fact, my understanding is that one of the features that people really want from Substack is actually a way to read your Substack newsletters, not in your inbox. If you're used to using your inbox for like to-do items and annoying emails that you don't want to look at.
And maybe a bundle of Substacks?
Or a publication?
Yeah. I know. That's what I loved about one of the people I interviewed was a woman named Anne Helen Peterson, very famous writer. And she just said, this is going to end up looking like I'm writing my own publication because I want to hire an editor and a freelancer. And,
so old media of them. Good stuff, as always. Ellen Hewitt, thank you so much. Startups reporter at Bloomberg News. Jill Weber, our thanks to you as well. Editor at Bloomberg Business Week as well. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading with the Dow, the S&P, NASDAQ all advancing. We are looking at records today. Rising prospects for a robust federal spending package, coupled with a slowdown in virus infection rates, sending stocks higher for the sixth straight session. Right now, the S&P is up by 16 points, a gain of 0.4%. The rally spurred by fresh signs the Biden administration is committed to passing a sizable aid bill to address unemployment. The Dow's up 157, up 0.5. NASDAQ up 78 points now, a gain of 0.6%. 10-year up 1/32, 10-year yield 1.15%. Spot gold up 1%, 18.32 the ounce. Silver advancing 2%, 27.56 for an ounce of silver. West Texas Intermediate crude up 2%, 57.97 a barrel for WTI. So it is an update on Wall Street with the Dow, the S&P, and NASDAQ are all advancing. As for the market backdrop, Stuart Kaiser is head of equity derivatives research at UBS Securities.
If you think back to, what really kicked off this rally, you had the election, but then you had very good vaccine outcomes, and then you had a large stimulus package, which, I think for most investors, they're reading that through to a bigger growth impulse.
Commodities prices are pointing to renewed optimism in the global economic recovery. Brent oil advanced above $60 a barrel for the first time in more than a year. Brent crude right now up 2.1%, 60.59. Among some of the oil stocks today, ExxonMobil surging 4.7%. ExxonMobil at 52.28 a barrel. We've got BP up 5.6%, 21.98. EOG Resources up 5.1%, and Pioneer Natural Resources up now by just about 4.1%. Tesla's investing $1.5 billion in Bitcoin. Bitcoin up today by 13.75%. Tesla shares, they're advancing by 1.1%. Recapping stocks at a record, S&P up 16, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. Bloomberg Business.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You're just excited. We're excited.
I just can't get enough.
Me too.
Bloomberg Business Week is brought to you by SEI. Visionary asset managers find opportunity where others are challenged. Exploit disruption's potential with SEI's global operating platform. Find out how at SEIC.com/IMS.
Yeah, because we were just really pumped to kind of all the stories that we've got going on today. And I got to say, Tim, earlier today, I read Sticky, as we like to refer to at Bloomberg, when an important headline crosses the Bloomberg. Well, it happened earlier this morning when Myanmar imposed martial law in its biggest cities following a third day of massive street protests opposing the February 1st military coup. So that just happened about a week ago. So we're continuing to watch this situation, as does Bloomberg New Economy editorial director Andy Brown, who in his weekly column writes that after insurrectionists stormed the U.S. Capitol, it shouldn't be a surprise that the generals in Myanmar decided to stage a coup. Let's bring in Andy for more. He joins us on the phone in New Hampshire. Andy, happy Monday. Nice to have you here. Make the connection, because I know you say it's not a causal link, but nonetheless, what were you thinking about when you put this column together, and what was the connection here between what happened at the Capitol and what happened in Myanmar?
Yeah, so as I say, there is no causal link. The connection is that democracy all over the world is in full retreat. Last year was just a shocking year for democracy everywhere. And partly it's because of the way the governments responded to the coronavirus pandemic, using high-tech surveillance techniques, limiting travel, basically poking and prodding around into the personal lives of their citizens, which is, what authoritarian regimes have been doing in response to public health crises now for hundreds of years. Of course, not the high-tech bit, but certainly the power of the state advances with epidemics. There is a link between those two. And, as I say, so the coup in Myanmar didn't come out of nowhere. We're seeing this in the Middle East. We're seeing it in Africa. And, of course, we're seeing it in Western countries, which pride themselves as being these bastions of liberal democracy and freedoms.
That's kind of a dismal thing to hear, that over the last year, we've seen democracies in retreat. Is this the direction that things will continue, or are there indications that this can be reversed?
Look, this was the Economist Intelligence Unit, which comes up with this democracy index, has been tracking the advance of authoritarianism and the retreat of democracy since 2006. And last year was the worst year on record. Only 8.4% of the global population, they say, now live in what they call a full-fledged democracy. About 1/3 live in authoritarian regimes. The U.S. is deemed under this index a flawed democracy. And the worst of it is they don't really see a way back to full democracy because of the way that society is fragmented. They don't see the social solidarity there that is necessary to rebuild a full democracy in the United States.
Well, and that's what complicates it, right, Andy? Because the U.S., it's hard to be an arbiter of good democracy when your own democracy is flawed, right? And if you're trying to kind of help other places around the world that are struggling with democracy, it doesn't put the U.S. in a great leadership role right now.
Well, that's exactly right. So, President Biden has of course denounced the coup, has demanded a return to democracy, and has said that he wants to work with like-minded democracies around the world to put pressure on the coup leaders in Myanmar to reverse themselves. Well, the problem is that right now the United States is not in a position to lead a democratic comeback in Myanmar, given that its own democracy is right now so flawed. The generals in Myanmar essentially are taking all this in their stride and have every reason to believe that they're going to get away with it. And to the extent that Biden and allies manage to punish the generals, it will only push them further into the arms of China, thus advancing China's great strategy, which of course is to make the world safe for the kind of authoritarian regime that it has very much become.
Andy, as you were reporting on this story, what has to change in the United States what did you learn about what has to change in the United States for, the social cohesion here needed to get closer to a full democracy and not a flawed democracy?
Yeah, the prescriptions from at least from the index really are quite nebulous on what America has to do. The real focus is, the consequences of failure to revive a full democracy, which is that the United States won't be able to, be the shining beacon on the hill, the shining city on the hill, the beacon of democracy that has galvanized democratic forces all over the world. And East Asia, of course, is where liberal democracy, as advanced by the United States since World War II, has recorded some of its greatest successes, from the Philippines to Indonesia, and of course South Korea, Japan, and so on. And it's really tragic to see the United States position now in these countries very much in retreat.
Yeah, and you also get into just the difficult positions that, whether it's Tokyo, whether it's Singapore, whether it's India, it's just gotten a lot more complicated as, these countries have gotten involved too more in Myanmar. So it's interesting. Andy, thank you so much. I think this is an important story that we've got to keep a watch on in terms of what's going on there and what might happen next. Andy Brown is editorial director at Bloomberg New Economy. Check out all of their work and Andy's work at New Econ Forum, that you can find on Twitter. And of course, Andy joining us on the phone from New Hampshire. Coming up next, where are we going? Oh, we're going to go to D.C.
Yeah, we got some good stuff. Look, I've got to get an update from D.C.'s impeachment trial in the Senate starts tomorrow.
Second impeachment trial for Donald Trump. So we'll get the lowdown on that. I'm also curious about that massive stimulus program, where that's going. All right, let's get back to world and national news. Back on over to Nancy Lyons. She is in our D.C. bureau. Hey, Nance.
Hey, you were talking about it. Many eyes will be watching tomorrow when the historic second impeachment trial of Donald Trump begins. One person unlikely to tune in, though, is President Joe Biden. That's according to White House Press Secretary Jen Psaki, who says he'll be busy.
I think it's clear from his schedule and from his intention, he will not spend too much time watching the proceedings of any time.
President Biden has been on the phone to reestablish relationships with allied leaders who will be looking at the second Trump impeachment trial and the events that brought it on.
Leaders of allied democracies are cautiously reevaluating the U.S. role, Ian Bremmer, founder of the Eurasia Institute, said in a Bloomberg interview.
Countries around the world look at the United States and says, I can't count on that ally. That country is not the country I thought it was. I mean, after the events of January 6th, the world leaders that I spoke to were stunned, and they were asking me, what are the consequences? There are no legal consequences for him, Trump, or for his colleagues.
Bremmer said President Biden has his work cut out to recreate confidence in the power of the American example. In Washington, Irv Chapman, Bloomberg Radio.
A House Oversight panel is renewing its investigation into political interference in the nation's coronavirus response. The Washington Post reports Congressman James Clyburn, who chairs the House Select Committee on the coronavirus crisis, has written to the White House explaining the investigations are critical to understanding what went wrong in the past year and what corrective steps are needed. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic at Bloomberg headquarters in New York City. So we're talking a little bit about the social media platform Clubhouse. It's in China, but apparently a lot of users, it seems like, got blocked.
Yeah, so users of the red-hot social media platform Clubhouse in China said they were unable to use the app on Monday after an explosion of discussions over the weekend. This was on taboo topics, including Taiwan.
Right. They talked about China-Taiwan relations, the prospects of unification, and they were, I guess, sharing their knowledge and experience of Beijing's crackdown on Muslim Uyghurs in the far west region of Xinjiang. And listen, these are political conversations, heated conversations, and, you know, we're not saying anything untoward, but it's, you know, there have been a lot of crackdowns in terms of media in China specifically when it comes to political and anything that is against the government.
Right. Clubhouse, just the latest example. I mean, if you've been in China before, it's difficult, if not impossible, without certain tools to actually access some of the platforms that we take for granted here in the United States. Have you used Clubhouse?
No. Have you used it?
I haven't signed up for it yet, but I've had, like, at this point, I think 4 or 5 friends invite me to use it. And there was a big debate over the weekend that played out on Twitter about just the time that people have to actually spend on some of these platforms. And that was one of the discussions, was like, where are these people? And actually the discussion was, Carol,
I'm curious.
Post-pandemic, are people going to have this is a hot social app right now.
Right, and you kind of drop in, right, casually?
You drop in, and it's really exploded during the pandemic. Are
Right.
people going to have the time after the pandemic, when they're going to and from work, to actually spend the time on it?
Listen, my friends have always been like, why aren't you on Facebook or why aren't you on Instagram? I've like never done this because part of it is I think about the time that I've got and how I want to spend my time. And I literally don't have time to do all that.
Yeah, I'm reminded every Sunday morning how much time I spend
When
on
it
my
tells
phone.
you.
Yeah, and it's like really disturbing.
You spent more this week.
Yeah.
Thank you very much. This is going to be, though, a story to watch. You're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. We're looking at records on Wall Street for the Dow, the S&P, and NASDAQ. Rising prospects for a robust federal spending package, coupled with a slowdown in virus infection rates, have sent stocks higher for the sixth straight session. S&P and NASDAQ also at records. Longest rally, by the way, for the U.S. stock market since August. Right to the numbers. S&P up 17 at 3904, higher by about 0.5%. NASDAQ up 85, up 0.6%, extending its winning streak for the year to 8.2%. The Dow up 153, up by 0.5%. 10-year yield 1.16%. Spot gold up 1.1%, 18.34 the ounce. Silver up 2.2%, 27.62 the ounce. And crude, West Texas Intermediate up 1.9%, 57.93 a barrel. Some of the names reporting after the close of trading today. Chegg, it is up by about 0.2%. Take-Two Entertainment up 2.4%, and Simon Property Group up now by 2.1%. Recapping, stocks higher. S&P up 16, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with my co-host Tim Stenovec, we're in our Bloomberg Interactive Brokers studio in New York City. Like you said, we've got to do a DC check because there's a lot going on this week.
Yeah, there is. Look, it's not just that this $1.9 trillion stimulus bill from the Democrats is trying to get pushed through, but there's also impeachment as well.
Right, exactly. And I believe that all starts again tomorrow. The weekend talk shows were full of conversations about all of this, and in particular, COVID relief spending versus inflation concerns. And that included Treasury Secretary Janet Yellen, who said the United States can return to full employment in 2022 if it enacts a robust enough coronavirus stimulus package. Yellen making the rounds of those Sunday talk shows yesterday to make her plea, including doing a spot on CNN's State of the Union. Listen to this.
This package is going to really speed recovery, and analysis by Moody's and economists at the Brookings Institution show that very clearly, that we will get people back to work much sooner with this package.
All right, and that, of course, was Treasury Secretary Janet Yellen, former Fed official Janet Yellen, speaking on State of the Union. But as we mentioned, Tim, she was on the Sunday talk shows. Listen, this is where we are. We've got this massive COVID relief package that President Biden has put out. There are Republicans and others, including some prominent Democrats, including former U.S. Treasury Secretary Larry Summer. I think there are some who are concerned we don't need this, or we want to make sure it's targeted to the people who really need it. And some are concerned about maybe too much money sloshing around in the economy and that potentially leading to inflation or an inflationary environment.
Yeah, and that could be a concern, not just for the economy, but of course for investors as well. It's interesting to think about Yellen making this plea yesterday on the talk shows.
Why?
Just thinking about who the audience is, right, and who she's trying to reach. It's not that she has to convince Democrats, although she might have to convince a couple of Democrats, but the audience is really one party. And one party that wants to see a smaller bill, or perhaps something more targeted, or perhaps this chopped up into smaller pieces and passed that way.
Exactly. And I think, listen, this gets to that argument about, do we overdo it, but in the process really helping people who really need it. And I think that's been the thinking certainly of the president, and certainly we're seeing the agreement with Treasury Secretary Janet Yellen. So let's talk a little bit more about this. Kevin Cirilli is with us. He's Bloomberg News Chief Washington Correspondent of Bloomberg Radio and Bloomberg TV, host of Bloomberg Sound On Bloomberg Radio, coming your way at 5 p.m. Wall Street time. So never a dull moment, Kev.
I literally just got off the phone with a source just within the last couple minutes. I said, I got to hang up. I got to go talk to Carol. And this source previously worked in the budget office in the Trump administration. And I said, essentially, are there any Republicans who are going to get on board with this $1.9 trillion stimulus? And the source said it doesn't matter. And candidly, even when you look at how the Republicans are messaging on this, whether it's someone like Mitt Romney, who is extending a political olive branch of sorts, it's really just to be able to lay a ground marker to say, hey, look, if you're going to name Republicans, President Biden, to the Reconciliation Committee and to reconcile this money, some Republicans would like to have a seat at the $1.9 trillion piggy bank to make sure that they get some of that allocated funds. In contrast to that, whether it's reminiscent of 2008 when Americans for Prosperity really transformed the grassroots Tea Party movement into a national budgetary cause, there are some Republican groups right now that are trying to figure out if they're at the beginning of that particular race.
So are you saying, or was your source saying it doesn't matter because this can happen without Republican buy-in?
Yeah, and I think that's really where we are, Tim, and especially, as Democrats are looking at this in the next 2 to 4 weeks window where President Biden has consistently said that they want this to be the crown jewel of their first 100 days in terms of domestic policy. Jen Psaki, speaking earlier today at the White House press briefing in the Brady briefing room, she even said that they're still cautiously optimistic about the vaccination rollout of this. Now, some reporters in the White House press corps this morning were really trying to look through whether or not the impeachment trial would weigh in on the negotiations. But I got to be honest, I've been, end of last week and this morning checking in with people. I think that those are two very divorced issues, and I don't foresee the impeachment trial really being an issue for the stimulus talks.
Well, yeah. So what do we need to know about the impeachment trial this week, right? It gets underway tomorrow.
Yeah. Well, we got the former President Trump, they released their, opening statements, for lack of a better word, and they filed their defense argument earlier this morning. I was reviewing it when it came out, and, to be honest, it's much of what you would expect coming from the former administration. I was struck by what Senator Pat Toomey, a Republican from Pennsylvania, had to say over the weekend on the Sunday shows, Carol, because he was someone who has probably been the most critical of former President Trump for his role on January 6th, but he predicted that there would not be enough votes to convict, simply not because Republicans don't feel former President Trump was involved in January 6th, but they take issue with prosecuting a former president. That has obviously been an open debate among scholars.
Yeah. All right. Well, it's certainly shaping up to be another busy week. Kevin, thank you so much. Really appreciate it. He is a busy guy. Kevin Cirilli, Chief Washington Correspondent, Bloomberg Radio and Bloomberg TV, host of Bloomberg Sound On. That's coming your way at 5 p.m. Wall Street time right here on Bloomberg Radio. Coming up, the chart of the day with Dave Wilson. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. You know what time it is.
Oh, I know. Chart of the
know.
day, song of the day.
Snap. Dave Wilson, he's going to come back with his chart of the day in just a moment. Let's get another check on the trading day and your top business stories. Here is Charlie Bell.
Hi, thank you very much. Happy Monday to you. And here's what's going on. The Dow, the S&P, and NASDAQ, they're all advancing. We are looking at records again today, not just for the S&P, not just for NASDAQ, but also the Dow Jones Industrial Average. Rising prospects for a robust federal spending package, coupled with a slowdown in virus infection rates, have sent stocks higher for the sixth straight session, if you're keeping track. And of course, we do. We're Bloomberg. Stocks posting the longest rally since August. Right now, we've got the S&P up 19, up by 0.5%. The Dow up 188 now, up 0.6%. NASDAQ up 89, up by 0.6%. Your 10-year down 132nd 10-year yield 1.16%. Gold up $20 the ounce. That's an advance right now of 1.1% to 1834. Silver up 2.4%, 27.66 a barrel. West Texas Intermediate crude oil up 1.9%, 57.95 a barrel on WTI. Brent takes out a key psychological threshold, 60.57 for a barrel of Brent, up right now by 2.1%. South Africa will temporarily halt the rollout of AstraZeneca's vaccine and accelerate its supply of shots from Johnson & Johnson and Pfizer after a trial showed the shot had limited efficacy against a new variant of the virus first identified in the country late last year. AstraZeneca shares right now, they are trading higher by 0.7%. Johnson & Johnson, little changed, up by just about 2 cents right now. As for Pfizer shares, they are lower by 0.4%. President Biden has said it is unlikely the U.S. will reach herd immunity before the end of summer due to a shortfall in vaccine availability. Dr. Joshua Sharfstein is vice dean at the Johns Hopkins Bloomberg School of Public Health.
Well, I think, COVID-19 is probably going to be with us for a long time. The question is how much disruption for how long. And I think that if barring a major surprise like with the variant, I think in the United States, where we should have ample vaccine well into the summer, with a reasonably high vaccination rate, the fall is going to look very different than it does right now.
And among some of the other vaccine names that we track, Moderna up now by 5.3%, and BioNTech up by 1.8%. Again, recapping equities higher, the S&P up 18, up by 0.5%, and a reminder that the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
In the saddle again.
Are we hearing any Steven Tyler in there?
Very nicely done. Did you cheat?
No,
you
I
totally
never cheat.
cheated.
I never cheat.
So the band is
Aerosmith.
Thank you. And the song is
Back in the saddle again.
You got it. Absolutely.
Who's back in the saddle again?
Yeah, I mean that sort of describes where U.S. companies are at this point, if you think about it. Back in the saddle again, and I got to tell you, that was supposed to happen this year, not last year. But now that we've gotten most of the fourth quarter earnings reports from S&P 500 companies, guess what? We have earnings growth.
How big? How much? How much earnings growth?
Well, as of now, based on our weekly updates out of Bloomberg Intelligence, you're talking about 3.6% growth. And bear in mind, analysts went into earnings season looking for a decline of 8.8% in profits, which would have followed, similar drops in the second and third quarters. But no, we are now looking at growth. And so what the chart does is sort of track the week-to-week progression of the overall figure as companies beat earnings estimates. That's really what's going on here. You know, for the third quarter in a row, you're looking at more than 80% of companies in the S&P 500 surpassing the average projection for their profit in a Bloomberg survey. So, you know, that's something to get your attention. And when you compare where we started to where we are now, and then go back and look at the last couple of quarters, you see that's been the trend. We're up about 12.5 percentage points in terms of the change in the earnings percentage over the course of the season, so to speak. Well, you go back and look at the third quarter, is 14.5 points. You look at the second quarter, it was 12.5 points on the nose. And there may certainly be more as far as the fourth quarter figures go. So that 3.6% could easily be over 5% by the time you get done. If you take the sort of what happened at the tail end of third quarter earnings season as a reference point, you could easily be above 5%. So, you know.
So in other words, we were expecting a profit decline, and that's not what we got for the fourth quarter, correct?
Exactly. And we're expecting profit growth to return in the first quarter, and it's already here. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So how much of that is factored in, right? That's what we've got to figure out. Like, that's the billion, trillion dollar question, Dave, at this point, correct?
Yeah, absolutely. And what's interesting is, you know, when I got done looking at the shifts during the past couple of earnings seasons and this one, you know, it started to dawn on me, this is why, at least in part, you're seeing shares tend to fall when companies' earnings beat estimates as opposed to rise, as you might expect. People have gotten used to the idea that analysts are too conservative. And so you're seeing a reaction. Of course, a lot of that's focused on the outlook as opposed to the past performance. But still, I mean, the idea that you in essence have a trend going on of analysts being way under what companies are reporting, I mean, you just have to figure that, you know, beating estimates doesn't count so much these days.
Hey, Dave, earlier in the show, we had Ellen Hewitt come on to talk about her recent article on Substack. And I know that your earlier charts are now available on Substack.
Correct.
You're part of...
I've been on Tumblr previously, and beginning of this year, I moved over to Substack. I actually had someone on Twitter suggest that maybe that was the place to put them, and so that's where they are.
And what do you think?
I mean, it's pretty easy to work with. I mean, you know, they're free, so it's not like I'm looking to make money like a lot of people on Substack with the paid subscriptions. But so far, so good.
All right, there you have it.
I did not know that.
Yeah.
I'm just looking at it. That's really cool, Dave. Very, very cool. Boy, did you love that?
TheOneDave.substack.com.
What, Dave? Yeah.
They made it really easy to move over from Tumblr, which is good.
Yeah, well, that'll do it. Very cool stuff. Great. Dave Wilson, thank you so much. Let's get back to world and national news. Nancy Lyons in our DC newsroom. Hey, Nance.
Hey, Carol. Former President Trump's lawyers are laying out their case against his impeachment, arguing the second trial is unconstitutional and he did not incite an insurrection. Political analyst and pollster Frank Luntz tells Bloomberg the House impeachment managers plan to lay out their case like a dramatic movie.
We're going to see footage that we've never seen before. We're going to hear from witnesses that we haven't heard from before. And they're going to lay it out as much as a documentary would, point by point. Less about the constitutionality about this and more about how it was wrong. Now, on the Republican side, this is going to give Donald Trump, if he is acquitted, it's going to give him the chance to say, you see, they tried a second time.
Trump's impeachment trial set to begin tomorrow at 1 p.m. Wall Street time. Well, while a majority of Americans agree representative government is one of the country's bedrock principles, a new poll finds only a fraction of Americans believe democracy is thriving in the U.S.
16% of Americans say democracy is working well or extremely well, a pessimism that crosses party lines. Nearly half of Americans, 45%, say democracy isn't functioning properly. The Associated Press Nork Center for Public Affairs Affairs Research poll's findings are consistent with how Americans graded democracy before the 2020 election. About 2/3 of Americans overall say Joe Biden was legitimately elected, while only a third of Republicans hold that view. In Washington, I'm Amy Morris, Bloomberg Radio.
Another Republican senator is leaving the fold. Senator Richard Shelby of Alabama says he will not seek a 7th term in office in 2022. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So, Tim and I were getting ready to talk about a story, and I just looked up at our most read on the Bloomberg in the past 60 minutes, and this one just popped up. I think I saw it on the New York Post, but this is a Dow Jones right through. And it talks about the family of a 20-year-old student who took his own life after believing he racked up big trading losses on Robinhood markets, filing now a lawsuit against Robinhood, the family that is, saying it's, quote, reckless conduct directly and proximately caused the death of one of its victims.
The tragic incident has been written about quite a bit, especially over the summer when the New York Times did a big profile of Robinhood. And to take us back to what happened, this is, and I'm reading from the Dow Jones story here, Mr. Kearns initiated a sophisticated options trade through Robinhood in which he believed his maximum loss was limited to less than $10,000. This is according to the complaint. But one weekend in June, Robinhood emailed Mr. Kearns to alert him that he needed to deposit about $178,000 in a few days to help rectify a negative balance, which the app showed was roughly $730,000. That's according to the complaint as written in Dow Jones.
Right. Apparently, Mr. Kearns then emailed Robinhood's, reached out to their customer support team 3 times overnight asking for more information, received only auto-generated replies, according to the complaint. He wrote a note to his family asking how someone of his inexperience was allowed to trade so easily, then killed himself, according to the complaint.
It's an absolutely tragic story, and it raises, Carol, one of the criticisms that many people have about Robinhood, which is it allows people to do sophisticated trades without a lot of friction, things that previously would have been difficult or would have cost money to do.
It's a good point, right?
And
it's easy to kind of get on this platform and just start trading.
It is. And look, I downloaded Robinhood and tried it over the summer to learn about it.
Yeah.
And it really does reward you. Like confetti explodes when you make a trade, and it has this gamification element that's getting a lot of scrutiny right now.
That's what I was going to say. It felt like a video game, but it's not a game. It's real. Anyway, this is something, again, one of those stories I know we'll be talking about a lot here in 2021.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell with the Dow, the S&P, and NASDAQ all in rally mode on this back-to-work Monday right now. Rising prospects for a robust federal spending package coupled with a slowdown in virus infection rates, sending stocks higher for the sixth straight session. The S&P up now by 21 points at a record 3907, up by 0.5%. By the way, S&P this year now up by 4%. The Dow's up 181 points, up 0.6%, up 2.4%. NASDAQ up 98, a gain there of 0.7%. Another retreat for shares of GameStop today. GameStop down today by 8.3%. 10-year down 132nd, 10-year yield 1.16%. Gold up 1%, 18.32 the ounce. Silver up 1.8% right now, 27.51 the ounce. And crude, West Texas Intermediate up 2%, 57.99 a barrel. Brent crude 60.59, up 2.1%. So a rally underway. S&P up now by 20, a gain of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, getting ready to wrap up the first trading day of the week. Let's get to the Drive to the Close. Larry Pitkowski is back with us, co-founder, or I should say managing partner and portfolio manager at Good Haven Capital Management. They've got roughly 160 million in assets under management based in Millburn, New Jersey, and that's where we find Larry on this Monday. Good to have you here. How are you?
Carol, I'm doing okay. How are you?
Doing all right. Hanging in there. It's a little cold here on
Certainly
the East
is.
Coast.
There's a lot of snow on the ground out here.
Yeah, it's a lot of snow. I don't know. How do you feel about this market environment right now?
You know, Carol, I think it's very important in investing to know where your circle of competence begins and ends. And I don't think, making macro predictions or, having a strongly held view about the level of the market and where it's going is within mine. But, clearly we have pockets of a lot of speculation. You have the markets overall selling it, higher than average multiples. And, but you can either sit around and philosophize about that all day, or as I said recently in writing to my investors, I can get up a little earlier and go to bed a little bit later in search of mispriced securities for us rather than sitting around and ranting about what are obvious excesses in certain areas. And so that's how I choose to spend the day.
Okay, so what are some of those mispriced securities that you're finding?
Well, a couple of areas that we have found as of late. First of all, I also recently wrote a bit over the last year or so about how I think the terms valuing growth and value investing have been somewhat misused. And so I've, over the last year or so, wrote a bit about how being a value investor does not mean you can't own good quality growing companies. It does not mean you have to have a draconian negative view of the future. And it does not mean you need to own crummy shrinking businesses. And those things, and I think growth is a part of value, and I think that's all gone a little bit misused from a nomenclature standpoint in the past, and I've tried to address it, and, I think it's important. In the past, I have written about how I thought there were some interesting opportunities in the property and casualty insurance area, which was a sector that I thought had some tailwinds. There aren't that many advantages to not being 25 years old, but one of them is you've seen a bunch of different cycles, and this, to me, looks like one of those periods in property and casualty insurance where it's a hard market, as they say. Prices and terms are rising to favor the insureds, and I think that bodes well for well-run companies in that sector. And so we have some exposure there, and we recently added Chubb, which has been well-run by Evan Greenberg for many years and had some very solid earnings recently. And I think they should benefit from what looks like a healthy
environment for the next couple of years.
So, you know, when in the context of property and casualty insurance, a lot of people like to talk about the disruptor Lemonade. Do you see that as competition to Chubb or you know, in that sense?
I think it's important, you know, I have read the Lemonade stuff. I think it is important to look at some of the new companies, which have, in many cases, you know, there's often an underlying, you know, reinsurance company underneath the surface who's taking on a lot of the risk. But I think digitization is important in, especially, you know, insurance and, you know, the primaries who face the consumer. I think it's very important. Another holding we have in the sector is Progressive Insurance, which has been one of the, you know, I think leaders in using big data to price well in auto insurance. Though auto insurance is not seeing the same positive pricing momentum you're seeing in a lot of other lines of property and casualty insurance. But I think it's important to pay attention, if you're a business analyst, like I consider myself, to any new entrant and any new form of technology, and decide if you think it could be materially disruptive, or if you think the companies that you're invested in can also harness technology to their benefit. So I'm comfortable with our companies and how they're awake to some of the trends that are changing, but I'm always looking at everybody new who shows up that I am aware of.
Yeah, interesting. I know, and like you said, I think the price increases is a key, right? Because there's been year after year of kind of fierce industry-wide price competition. So if that's changing, that fundamentally then maybe changes the prospect and outlook for Chubb, correct?
I think it does, and I think, you know, we'll see how long it lasts, but I think you are seeing, you know, you look at the results from, you know, across that sector, and you're seeing much better results than you've seen over the last couple of years. So they still have claims to deal with from, you know, natural disasters and the COVID claims, but I think the well-run ones, which are the ones that we own, should be able to do just fine for a while, to say the least.
Okay, so you guys recently bought PG&E, which was a surprising thing for me to read. It's filed Chapter 11 bankruptcy twice because of exposure to wildfire liabilities. What's the argument there?
PG&E is, I think, a remade company now that it has come out of bankruptcy. There is a wildfire fund. They have articulated they think earnings are going to be about $1 and then grow about 10% a year on a go-forward basis. I think there had been terrible mismanagement in the past from a standpoint of how to think about safety. And I think they have done their best to try and wipe the slate clean and start over with some real protection from a liability perspective, and with a go-forward earnings growth profile that looks decent, and with a share price, most importantly, that looked very undervalued compared to where the peers trade. And they were also searching at the time that we bought it for new management, and it turns out they hired the very well-respected Patty Poppe, who came from CMS Energy, and then just recently hired Adam Wright away from Berkshire Hathaway Energy. So those are really credible and impressive leaders that should be able to, I hope over time, return the company to really good standing, and the growth profile over the near term looks above average, and the share price looks much cheaper than the peers.
Yeah, a whole new risk modeling and fire spread technology that they've been deploying and laying out to further reduce wildfire risk, among other things. Larry, good to check in with you. Stay warm and take care. Larry Pitkowski, he's managing partner, portfolio manager at Good Haven Capital Management, on the phone from Millburn, New Jersey. Yeah, interesting. Kind of, you know, not necessarily exciting, not growth stocks, but, you know,
and
certainly.
PG&E is a surprising one.
Well, and I do wonder, this happens, right? A company goes bankrupt, they get all their problems out on the table, they get rid of their debts and their kind of liabilities, and then they kind of regroup and come back. So I could see maybe why that's an interesting play.
And investors get scared away.
Yeah, exactly. All right, coming your way, folks, in just a few minutes, the closing bell on Wall Street.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange. Records across the board on Wall Street. Late day rally. We closed at the best level of the day. Folks from Kellogg ringing that bell. And this update brought to you by Witham, a forward-thinking advisory and accounting firm offering industry expertise and innovative solutions for your business. Experience the Witham way. Innovative, adaptive, effective, trusted. Visit Witham.com for more. Stocks advance. The Dow, the S&P, NASDAQ all climbing to records. Rising prospects for a robust federal spending package coupled with a slowdown in virus infection rates send stocks higher for the sixth straight session. S&P at the close up 38, a gain of 0.7%. The Dow up 236, up by about 0.8%. NASDAQ surged 131 points, an advance there of just about 1%. NASDAQ 100 index up 0.7%. Dow Transports up 0.7%. Russell 2000 up 2.5%, bringing the year-to-date gain now for the Russell 2000 to almost 16%. Now, what about the market backdrop, specifically valuations, given the records, and how does that affect the stock picking process? Larry Pitkowski is managing partner at Good Haven Capital. He was our guest moments ago right here on Bloomberg Business Week.
I can get up a little earlier and go to bed a little bit later in search of mispriced securities for us rather than sitting around and ranting about what are obvious excesses in certain areas. And so that's how I choose to spend the day.
Palantir Technologies and IBM are uniting in a partnership that will dramatically expand the reach of Palantir's sales force while making IBM's own artificial intelligence software easier for non-technical customers to use. Palantir up today by 5.9%. The S&P 500 index, again recapping, up 28, record there, up 0.7%. Also today, records for the Dow and NASDAQ. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaken, not stirred.
On Bloomberg Radio.
All right, we're off and running. First day of the trading week, and it is done. Charlie breaking down those closing numbers here on Wall Street, Tim, and we did see a leg up in the final few minutes of trading. So we are records across the board here and closing at our highs of the session. And we definitely saw a risk on trade. If I look at the S&P 500 specifically, 370 names higher today, 133 lower, 2 unchanged. And we are waiting some earnings from Take-Two, from Simon Property, from Chegg, so a few earnings to come. Then we've got some bigger ones, including Twitter and Disney later on this week. You're looking at those major industry groups.
Yeah, that's right. Look, 10 of the 11 in the green today, Carol. Energy leading the way, up more than 4%. Financials higher by 1.2%. Information technology higher by 1%. Utilities, the only industry group lower on the day today, down by just about 0.8%.
Yeah, and you speak of those energy names. Tim. Marathon Oil was your number one gainer in the S&P 500 today. That stock alone up about 13%. We saw a lot of activity there. It's up the most in about 3 months there. So some big moves there when it came to Marathon. I'm just taking a look at what Marathon's doing so far this year. It's up 34%. Listen, this is a group, when we look at those major industry groups, energy is either at the top or the bottom of the pack, depending on the day's news, depending on the day's trade, depending on some of the fundamentals out there. But we've seen certainly a bounce back in a lot of these names.
Yeah, hey, what a difference 10 or 11 months make, right?
Yeah, exactly. And Occidental Petroleum, that is your second biggest gainer in the S&P 500 specifically. That stock too was up about 13% so far this year. It is up 47% so far in 2020. On the flip side, Hasbro, we saw a bunch of selling. That's your number one decliner in the S&P 500. That stock was down about 4% in today's trade. It's little changed on the year overall. Hasbro, though, earlier this morning before the open came out with its latest earning, fourth quarter EPS. That was a big miss, 76 cents a share versus $1.14 in terms of what Wall Street was forecasting. And if I look at fourth quarter net revenue, that was a bit of a beat, though, $1.72 billion versus an estimate of $1.68 billion. But nonetheless, certainly some disappointment, which explains why you saw it declining in today's trade.
Well, you mentioned we are awaiting some earnings. We will certainly bring those to you when we do get them. A lot of events coming up this week. We are in the midst of earnings season. You mentioned Disney earnings coming out later this week. Twitter tomorrow after the bell, not before the bell. After the bell. Twitter used to report before the bell, so that's a change.
Yeah.
We're also expecting Honda, Cisco, L'Oreal as well, and I'm also right now just seeing Chegg cross the board. Chegg net revenue was at $205.7 million, handily beating estimates of $189.5. The company sees revenue for 2021 between $780 and $790 million. That's at the high end of the estimates, which came in at $780.5 million. The company sees adjusted earnings per share at 55 cents, beating estimates for the fourth quarter at 49 cents a share.
Stock was bouncing around. Initially, it looks like a bump to the upside, but now it's down almost 2% here in the after hours. And that stock, it's the educational, online educational platform, I should say, for those not familiar, $13.1 billion market cap. Stock's up about 13%, roughly give or take so far this year. But again, maybe some disappointment there, as again, the stock just down about 1% here in the after hours. And Take-Two Interactive also out with their earnings just crossing the Bloomberg terminal. The company's third quarter adjusted EPS of $1.24. That is 29 cents better than what Wall Street was forecasting. Their revenue for the third quarter, $814.3 million. That too is a big beat. $752.6 million was the forecast. They're raising their outlook for all of fiscal year 2021, and they're talking specifically about the fourth quarter adjusted EPS of 52 to 61 cents, and that compares with a much lower estimate of 43 cents a share. So they are definitely bumping up their numbers, and that stock in the after hours rallying about 4% here, Tim.
Yeah, a slew of earnings coming after the bell today. Later this week, Carol, we're also expecting Federal Reserve Chair Jay Powell to speak on Wednesday. I think a lot of people will be listening for any comments about inflation.
Yeah, absolutely. Like, this is what Janet Yellen was talking about certainly over the weekend, or at least she doesn't seem to be too concerned, and she's comfortable, and we've heard this from Jay Powell and co., comfortable about letting maybe the economy run a little hot to make sure that they get whatever stimulus is needed out to those people that need it. But ultimately, that is something, we're going to be watching, and I expect to hear a lot more information. Do want to mention we've got a red sticky crossing, Electronic Arts, a little bit of deal flow to buy Glue Mobile for $2.1 billion enterprise value. So we're seeing, we've seen a fairly active deal flow environment, I would say, over the past year or so. So again, a little bit of deal flow here right after the closing bell. All right, you are listening to Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door. It's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey, Dave Wilson, give us your stock of the day.
Affiliated Managers Group, Tim. The company has investments in about 35 active money managers in stocks, bonds, and alternative assets. They almost go from A to Z, as the firms range from ABAX Investments to Yacktman Asset Management, so A to Y. Affiliated Managers was founded in 1993 and went public in 1997. The ticker is AMG. The shares hit a record in 2015. Then they fell as much as 81% in the next 5 years as investors turned to passive index funds. Now, Affiliated Managers reached an 11-year low last March, and since then, the stock has recouped much of its loss. The recovery accelerated today after the release of fourth quarter results. Affiliated Managers' earnings and revenue beat analyst average estimates in a Bloomberg survey, even though clients pulled about $16 billion from its funds. The company cited strength in private markets, wealth management, and specialty bond funds. Its profit forecast for this year, also top projections. All this sent affiliated managers to its biggest gain since April 2009. The shares jumped 17.5%.
All right, Dave, thank you so much. And just a reminder again, that headline, Electronic Arts to buy Glue Mobile for $2.1 billion enterprise value. So a little bit of deal flow. You're done.
I'm done. It's a good Monday.
Monday's over. Yeah, good one. Looking forward to the rest of the week. Have a good evening.
Thanks, you too.
All right, Tim Stanovic there. Let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Former President Trump's impeachment trial begins tomorrow on a charge of inciting a mob to invade the Capitol. But President Biden will not be following the Senate proceedings, spending his time on his own agenda, according to White House Press Secretary Jen Psaki.
He views the events of January 6th as a horrific attack on our democracy, but he's going to leave it to the Senate to determine the path forward here.
The House managers prosecuting Trump, all Democrats, say in their pre-trial brief the former president was singularly responsible for the storming of the Capitol. Trump's attorneys are branding the impeachment an act of political hatred by House Democrats. Well, for the first time, a sitting member of Congress has died after testing positive for the coronavirus. Bloomberg's Nathan Hager has more from Washington.
Texas Republican Ron Wright died yesterday after battling COVID-19 and lung cancer, according to a statement from his office. Wright was a member of the House Foreign Affairs and Education and Labor Committees. He succeeded fellow Republican Joe Barton just 2 years ago on his retirement. In a statement, House Republican leader Kevin McCarthy calls Wright a fighter who passionately served his constituents, Texas, and America. Ron Wright was 67 years old. In Washington, I'm Nathan Hager, Bloomberg Radio.
Twitter is considering subscription fees for some of its products to reduce the company's dependence on advertising revenues. Some ideas include the ability for users to pay the people they follow for exclusive content or charging for advanced services like TweetDeck. The undo send feature. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, you are listening to Bloomberg Business Week. Carol Master, and joining me right now is Charlie Pellet. And Charlie, this story by Prashant Gopal, who's there in Boston, writes all about the residential market. It's a story about rent sliding in New York City, San Francisco, while cheaper cities are seeing rents go up a lot.
It makes sense because if you can
Supply
work from
and demand.
anywhere, you might as well move to a place that's a lot cheaper. Let me just get right to the punchline because people are always curious about real estate. Let me get right to the rents here. Rents down almost 22% in San Francisco. Just over a year ago, that number would have been absolutely unthinkable. It's down 16% in New York, equally unthinkable, 9% in Boston. And by the way, these numbers are from RealPage. So clearly rents are dropping. In the Pellet household, we had a conversation over the weekend about moving. My wife's thinking about, says, oh my God, look at these rents. They're dropping in Manhattan. Let's move to Manhattan. What I didn't have the courage to tell her in that conversation is I like Brooklyn for a reason. I like not being in Manhattan. Rents are also coming down in Brooklyn, but certainly this story resonated with me.
Time for a pied a terre. I'm just going to say it. Of the 150 large metro areas studied by RealPage, 119, though, Charlie, showed an increase. Rents jumping 8% in Riverside, that's a suburban area outside of LA, and Sacramento, about 90 minutes east of San Francisco. They climbed 6% in Memphis, Tennessee, and about 5% in Phoenix, Detroit, and Cleveland. But you're right. Listen, as people are moving around or have been moving away of larger cities during the pandemic, and especially with if we're going to see increased flexibility by a lot of employers where you can kind of work anywhere, you're going to see these dynamics and this change.
Very briefly, it is related, but it's not the topic we're necessarily talking about. There was a great story last week involving Airstream trailers getting turned into offices. You can buy a pretty swanky, one of those big silver trailers that you tow all over the place, so you can do a work from home on the road.
I want to live in a tiny house with a large closet attached.
There you go.
Sarah, one of our producers here, she's like, me too. I want to do that. All right, Charlie, thanks.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet, developing story, repeating the earlier headline. Electronic Arts buying Glue Mobile, $2.1 billion enterprise value there. EA up by 2.6%, looking at a trading halt on Glue, GLUU on the ticker symbol there. Bring you up to date on that. Also after the bell, Take-Two Entertainment, third quarter adjusted revenue, $814.3 million. Estimates, $752.6 million, down 2.5%. Take-Two's third quarter adjusted EPS, $1.24, estimates there, 95 cents. It was an update on Wall Street. Stocks closing at or near session highs all the way around. S&P up 28, up by 0.7%. The Dow up 237, up 0.8. Give you the numbers, the Y in a moment here. NASDAQ up 131, up by 1%. To be clear, records across the board. Also to be clear, the year is young. We've got NASDAQ up this year by 8.5%. Rising prospects for a robust federal spending package coupled with a slowdown in virus infections rates sent stocks higher for the sixth straight session. Gold up 0.9%, $18.30 the ounce. Silver up today by 1.5%, $27.43 the ounce. Tenured on 2/32, 10-year yield 1.17%. And crude, West Texas Intermediate up 2.2%, $58.08 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks. Well, earlier today, Tim and I had a chance to talk to filmmaker Nick Bilton about his new HBO Max documentary. It's called Fake Famous. It's about social media influencers. And in this excerpt, Bilton explains how the film and the documentary got started. Take us to the moment where an idea to do this became more than an idea. What was the first step that you said, wait, I got to sit down and I got to make a documentary here?
So I've been a technology reporter, as you said, for almost 20 years now, and I was at Vanity Fair about 5 years ago, and Graydon Carter was my editor-in-chief, and, we were kicking around a few documentary ideas over the years, and a couple of years back he said, we should do a documentary on influencers. And I said, well, the whole industry is a bit of a joke. And he said, what do you mean? I said, well, I could make an influencer in 10 minutes. And he said, well, that's our documentary. And that was essentially how this all began. And I had been at the New York Times. I'd written about bots, these fake accounts that exist on social media that can be created by writing code and so on. And I had written about the rise of them and how advanced they were getting over the years. I had then written about them when I was at Vanity Fair talking about the election, how Donald Trump and Hillary Clinton both had millions and millions of fake accounts following them. And, of course, influencers employ these same tactics, and that was essentially what we wanted to show in the film.
Hey, Nick, you say that influencer culture is a bit of a joke, but, hey, there's real money behind this, and there's real money behind it still, even though it seems like a lot of people and companies are in on the joke.
Well, I think it's interesting because there is real money behind it, but it's at the same time it is so inauthentic in the way that the money changes hands, and the way that influencers essentially purport to be kind of these new bearers of ideas and culture and consumerism and so on. It's when we really kind of show this in the film. I mean, one of the things that we talk about is how influencers, the entire concept of it is very similar to advertising, but even more extreme, in that the whole goal is to make you feel worse about yourself so that you want to experience what an influencer experiences in their wonderful life of their free vacations and their fancy Lamborghinis and this, that, and the other. And really, they're getting all this stuff for free, but they're not necessarily being honest about whether they actually like it or not. And so... Sorry.
Well, this is like kind of social media at its core, though, right? It's not just influencers who are posting the highlight reel, right? This is like how normal people use Instagram, right? They show off the best parts of their lives.
It's like the holiday letter, the trips to Africa, and the kids are all getting straight A's on steroids.
Yeah. Well, it's completely true. I think that, Instagram, I personally believe is the worst at this. They're the guiltiest of it, because Instagram was founded on this idea of being deceptive to the viewer, and the whole point of filters that were the highlight of Instagram was to make your really bad photo look really good by just pressing a single button. And the founders of Instagram, they wanted it to feel like like a Vogue magazine or a Vanity Fair. They wanted people to post these beautiful shot images and make it appear as if, you know, that was the life that you were living. And I think that the end result of that was that you now have a system in place where I think it's just the most inauthentic platform on the internet. Every platform has their problems. You have Twitter, where it's, you know, everyone's just angry at everyone else, and you know, they all have their thing. But Instagram, I think, is the absolute most deceptive of them all.
Well, and talk about deception. I mean, it's like when you find out reality show. What do you mean that's not real? And you're finding it out with Instagram. And I love where, you know, you showed and you guys use like a toilet seat to be a plain window. Like, who'd have thunk? Like, it's just amazing.
A new toilet seat.
A new toilet seat. But what's interesting is, you know, and Tim and I were talking before we got going, you know, kids want to do this. They want to be influencers. They want to be famous, which is something you ask a group of 20-somethings, right? When you kind of line up a couple of people to work with.
So the one of the other aspects of the beginning of this film that we did a lot of research into, and I had read about before, was when you look at the studies that have been done, there's all these longitudinal studies that have been done. UCLA has done them, other universities too, where over the years they ask kids every single year, what do you want to be when you grow up? And back in the 60s and 70s, kids used to be wanted to be a teacher or a lawyer or a doctor. Back in the 80s, they started to kind of get a little bit interested in fame, but it was fame for something that they had done, like they wanted to be a basketball player or an actor or something. Fast forward to today, and kids just want to be famous, and they want to be famous influencers because they think that is the fast track to get there. And so now, 87% of children in America say they want to be famous influencers when they grow up.
And, you know, that's interesting that you say that, because you do highlight three people, Chris, Dominique, and Wiley. And that's kind of, without giving too much away, that's kind of the conclusion that Chris comes to, right? He talks about how he wants to be famous for being him.
Yeah, so we, you know, the film started off with this idea of like, let's go and get 3 people who have a very small following online. Let me go and buy them fake followers, you know, fake bots that exist on social media. Let's do a bunch of fake photo shoots, as you said, where we took an airplane seat, you hold it up against the screen that looks like it's out of an airplane window, you take a photo, and it actually looks like you're in a private jet.
Yeah, it's really amazing.
The toilet seat. Look, we're all going to be like buying toilet seats now.
I know, right? To pretend we're on a fake private jet.
That is just wild. That is, of course, filmmaker Nick Bilton. It's his new documentary. It's on HBO Max, and it's all about becoming a social media influencer, specifically Instagram. You can hear that full interview on our podcast feed.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Masser in our Bloomberg Interactive Broker studio in New York City. Coming up, nice way to wrap up our day here. We talked about this last week. We talked about the wine startup app, Vivino. They raised a bunch of money. So we're going to check in with the CEO and founder in just a moment. So we'll get to that right here on Bloomberg Business Week. First up, though, back to your top business stories, some of the news after the close. Here is Charlie Bellett.
Hi, thank you very much. Happy Monday to Carol Masser, Electronic Arts, maker of the Madden football video games, buying rival Glue Mobile for $2.1 billion, obtaining titles like Kim Kardashian, Hollywood amid a surge in at-home play during the pandemic. Electronic Arts is paying $12.50 a share for Glue Mobile. That is a 33% premium over the closing price of $9.39 in New York. Take-Two also reporting after the bell, raising its outlook for fiscal year 2021. Shares of Take-Two, they're up now by about 0.1%. An update on Wall Street, putting it mildly, records again. Today, however, the Dow joined the record club, up 237 points, up 0.8%, 31,385. S&P, NASDAQ also at records. S&P up 28, up 0.7. NASDAQ up 131, up by 1%. 10-year yield, 1.17%. Gold up 1%, 18.31 the ounce. West Texas Intermediate crude up 2.1%, 58.05 a barrel. Rising prospects for a robust federal spending package coupled with a slowdown in virus infection rates sent stocks higher for the sixth straight session. Now, what about the market outlook given the gains that we have seen for U.S. stocks and current valuations? Jill Carey Hall is U.S. equity strategist at B of A Securities.
We have a neutral-ish call on equities with the S&P 500 year-end target of 3,800. And, we're starting to see signs of more euphoric sentiment in the market. Our sell-side indicator, where we track strategists' average recommended equity allocations, has continued to tick up. So we're getting closer and closer to a sell signal on that.
Tesla shares up 1.3% today. Tesla is investing $1.5 billion in Bitcoin. Also has signaled its intent to begin accepting the cryptocurrency as a form of payment. Today, we did see Bitcoin surge by 17.1% right now. Bitcoin, 44,320. Again, recapping equities higher. S&P up 28. That is a record, up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that update. You are listening to Bloomberg Business Week. So, as I mentioned, we mentioned this last week. It was our bite of the day, I think, in fact, about how wine startup Vivino raised $155 million to expand into new countries, add some staff, build out its recommendation engine after more than doubling wine sales during the pandemic, more than doubling. So here to talk more about what they are doing is Heini Zachariasen. He is CEO and founder of the wine app startup Vivino. He's on the phone from Copenhagen. And full disclosure, I love great red wine, and I use the Vivino app. In fact, was using it over the weekend. Heini, nice to have you here. Welcome, or welcome back.
Thank you very much. Very glad to be here.
So first of all, I want to talk about the capital raise, but I really also want to find out what this year has been like for you. Take me back to kind of last March and April and the pandemic. What was going on in your business? What was going on with your employees? What were you seeing in terms of consumer trends?
Yeah, it was a little bit of a crazy time, honestly, because we didn't know what was going to happen, right? So we have people in Hong Kong too. They had seen something. But once it hit the U.S., we're talking mid-March or so, we actually started by sort of pumping the brakes a little bit and say, okay, what's this going to be? What's this going to look like? What's going to happen to our sales? But we pretty quickly saw that it was going to move us sales-wise in the right direction. So things, when we hit 20th of March, things just jumped. Revenue just went way, way up there. In the beginning, we also had a little bit of problems with customer support and supply and so on. So that took us a month or two to really get back up to speed. But like a crazy time for us, and it was rough, but numbers were good.
Yeah, but so pretty quickly, March, that all of a sudden, and has it been pretty consistent in terms of growth, or have you seen a steady increase from month to month?
it really jumped up for 2-3 months and went like totally crazy, right? and we maybe in the beginning thought, okay, what is this? It's just like a short-term thing. People want to make sure they have wine or so. But then it stabilized at a certain level, and it's been really, really good ever since that. Just more buyers converting and just higher numbers all over. And even when Europe sort of opened up over the summer, we didn't see numbers really go down again. So we just landed at a new level.
Well, that's what I want to ask you. And I'm sure, listen, honey, that a lot of people are asking you, and we all wonder that, okay, there are these trends, whether you're a Peloton, whether you're, what have you, do what we've seen over the last year because of the pandemic, and we were, forced to, predominantly be in our homes, work from our homes, live in our homes. Do those trends stay with us? What indications do you have that the growth that you've seen, that you hold on to it and it continues to stay with you as the world starts to reopen?
Yeah, it's a good question, right? I think first we can say for certain, like, wine is probably not a fad, right? It's probably going to stay with us.
Not in my world.
Or a question of, yeah. So they're probably going to keep buying wine. But what our theory and what we've seen so far, especially when Europe opened again, is that it's really, really hard to get people to change habits. But if you have something that is more convenient and easier and so on, they don't go back. Like we buy most of our supermarket stuff online now. This is me personally, and I would never go back. Like once I've seen it work, I'm just not going back. And the same goes for something like Amazon, right? There's a reason why we do it, because once we start doing it, it's incredibly convenient. And the same goes for buying wine online.
Well, and I'm curious about your demographic. Do you have a typical user? And if so, describe who they are and what kind of buying do you typically see from them?
So we have 50 million users around the world, so it's really, really difficult for us to say what a typical user is. Previously, I would say pre-pandemic, it was people that were a little bit more into wine, not the high-end user, more the higher end of the casual drinkers. But now I think it's changed. Like we see everybody doing it now. We also see price points moving down. That doesn't mean people buy a wine that's less expensive. It just means that we're taking more from the offline part, and people are starting to buy less expensive wines online now too.
Yeah, that's pretty fascinating that's happening. And yeah, I think I've heard that from some other folks too. Hey, listen, Heini, sit tight for a moment because we've got to do a little bit of news, but I want to come back and continue the conversation, talk a little bit more about what you plan to do with that recent $155 million that you spent and how you see it playing into your growth going forward. So we're going to get back to Heini Zachariasen, CEO and founder of the wine app startup. It's Vivino. He's joining us on the phone from Copenhagen, so we'll get back to him in just a moment. Just a quick reminder of how we ended up the trading day. We pretty much finished at our highs of the session. Records on the Dow, S&P, and the NASDAQ. So up 237 points on the Dow, S&P 500 up 28, and the NASDAQ ahead by almost a full percentage point. Let's get back to that world of national news. Here is Nancy Lyons.
Thanks, Carol. Senate Majority Leader Chuck Schumer says there's a bipartisan deal on the structure of former President Trump's impeachment trial that begins tomorrow.
Each side will have ample time to make their arguments. 16 hours over 2 days for the House managers, the same for the former president's counsel. If managers decide they want witnesses, there will be a vote on that.
The single article of impeachment accuses the former president of inciting the violent and deadly attack at the Capitol January 6th. Trump's attorneys say the case is constitutionally flawed. House impeachment managers say Trump willfully incited violent insurrection against the government. Well, President Joe Biden and Vice President Kamala Harris this afternoon took a virtual tour of the mass COVID-19 vaccination site set up at State Farm Stadium in Glendale, Arizona. Biden thanked workers for helping achieve a lofty goal.
We committed to do 100 million vaccinations in the first 100 days, and we're exceeding that. With the grace of God, the goodwill of neighbors, and help of people like you, we're going to end up doing more than that.
Earlier today, CDC Director Rachel Walensky warned that virus variants are spreading throughout the country.
As of February 7th, 699 variant cases have been confirmed across 34 states, with 690 of these cases being the B117 variant, the variant first reported in the UK.
The virus has now claimed the life of a sitting member of Congress, which is a first. Aides say Republican Congressman Ron Wright of Texas died yesterday after battling cancer as well as COVID-19. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Charlie Pellet joining me once again. I'm so glad you're here because I wanted to do this story. I've been dying to do it. It's in the New York Times, and it's about the 10 things you might have missed at the Super Bowl, according to the New York Times. One thing is the Puppy Bowl.
Exactly. We watched a little bit of the Puppy Bowl. How can you not love the Puppy Bowl?
I love puppies.
Everybody loves puppies. Come on, you got to love the Puppy Bowls.
And this year's sweetheart, apparently, according to the Times, a puppy named Chunky Monkey who ran onto the field and promptly fell asleep, much like most of the Chiefs' defense would appear to do hours later. Not my words, the New York Times. Then there was the Oatly commercial. I love Oatly. This, I don't know if you've been watching this or following this. It's backed by Oprah. It's seeking a U.S. listing with a value of about $10 billion, maybe as soon as May. We recently had a story on the Bloomberg, but it also had a kind of weird commercial, Charlie.
It was a very weird commercial where I think it was the CEO who was sitting there in a field with a keyboard playing a song. And I said to my wife and son, I said, this is weird, but I said, you know what? Is Wall Street the ultimate intended audience for this particular commercial, given what you were saying about the IPO, certainly raising the visibility on the company?
It's like milk, but made for humans. Wow, wow, wow. Okay. Vince Lombardi hologram, you saw it several times or a couple of times. That was pretty cool, pretty inspirational.
Yeah, it was. And I'm going to whip through this list here because there's a lot on there. The Bruce Springsteen Loves Jeep commercial.
Yes.
I got it. Dave Wilson must have been sitting, his head must have been exploding when he saw that.
My daughter was like, is that Bruce Springsteen? And is that a Jeep? Because I don't think he's ever done anything, right, like this before.
Yep, exactly. The Streaker, enough said on that.
They barely showed him, but bum.
And then there was the Weekend show. Unbelievable. What a spectacular show that was.
The Weekend is so cool. And Amanda Gorman, kind of near and dear to us. We all got to spend some time with her at the Boston Pops a couple of years ago, the 4th of July celebration, but she did a pregame poem, which was just pretty incredible.
And just a few final words. Tampa, wear a mask. It's that simple.
Exactly. It's simple. Charlie says it. Come on. Thanks.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Glue Mobile shares soaring 38% after hours. Electronic Arts, maker of the Madden football games, is buying Glue Mobile for $2.1 billion, getting titles like Kim Kardashian, Hollywood. Amid a surge in at-home play during the pandemic, again, Glue Mobile, GLUU on the ticker there, it is up by 38%. The Dow, the S&P, NASDAQ all advancing to records today. S&P 500 index climbing for the longest rally since August, up 6 in a row. S&P up 28 points, up 0.7%. The Dow up 237, up 0.8%. NASDAQ up 131, a gain there of 1%. 10-year down 2/32, 10-year yield 1.17%. Gold up 0.9%, 18.31 the ounce. And West Texas Intermediate crude up 2.1%, 58.03 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Let's get back to our conversation with Heini Zachariasen, CEO and founder of Vivino, on the phone in Copenhagen. And I said, full disclosure, I love the Vivino app. I use it. I think what's really cool about it, Heini, to be quite honest, is I can be anywhere, and if I have someone, I can quick take a picture, I quick get some views, I can buy it. Like, it's just wonderful, and it's so easy. I do wonder, too, like, how sticky is it? Once you've got somebody who's on the platform, do they automatically become a buyer, a shopper? Do they continue to increase it? Like, how does it play out?
It varies quite a bit. It is obviously an app, so you do lose a lot of people in the beginning. But once people start going, right, after people have used it for 1 year, it just doesn't change. Like, once they're on board, have used it for 1 year, that feels like it's a lifetime. We've been around for 10 years now, so we have pretty good data on that. So the people that really appeals to, they just keep going. So that's amazing. Obviously, we build new features all the time,
right,
and so on to make it better and better.
Is the U.S. your best market, your fastest growing, or where is it?
U.S. is by far our biggest market commercially. Around 50% of our sales are in the U.S., so by far the biggest. Not the fastest growing. I mean, relative to the market, it's by far the biggest. But some other markets have started late. This might be a little bit strange, but actually France started relatively late.
That is funny.
Now it's growing really. It took them a while to accept us. Like, we're not French, so they wouldn't accept us. But now they love us, so we're happy with them now.
Well, so what are you going to do with the money, $155 million that you guys have raised? How do you need to spend it? And I am always curious, for an app like yours, what's your most expensive, when you go through the balance sheet? Is it the people? Is it marketing? What's the most expensive line item?
Yeah, we're very privileged in the way that we spend very little money on marketing historically, right?
Yeah.
Because we have 20,000 people that install the app every single day organically. So that's a privilege. When it comes to that might change in the future. Just we have a little bit more cash now, but for us, it's all about helping people drink better wine. So number one on our list is really upgrading product and engineering, just to make the product even better. And a lot of that is about using machine learning and AI to really learn every single user. We know all these wines. We have 12 million wines on there, and then we have these 50 million users. And one thing is giving them ratings, but we want to give them personal ratings, just like Netflix does. So we're launching something called Match for You. So once you scan a wine, you're not just going to see the rating. You're also going to say, it's 89% certain that Carol will like this wine. So that we're very excited about.
That's really interesting. That's really clever. Where are the areas in the world that you're not yet, in terms of geography, that you want to be, that you need to be?
Yeah, I think Asia has been a slower region for us.
Yeah.
It usually starts with the real wine lovers that start using it, and then it spreads after that. But there's no doubt about, like, North America and even South America and Europe are strongest places. Asia is lagging a little bit after, but we're starting to grow there now. So.
Yeah, no, interesting. And I'm also curious, so I think I was just looking at some of the numbers, and at least some of our reporting. This recent funding round of $155 million values you guys between $600 and $800 million. Does that feel about right?
That's a good question. We had some Bloomberg analysts estimate that, and I'm not going to comment any further.
Okay, fair enough. Fair enough. Maybe over a glass of wine, we can talk about it sometime.
Yeah. It's going to take a lot of wine.
Okay, that's fair. A lot of good wine. You're not profitable yet, right? And probably not this year nor next. Why? If it's doing so well and you guys are adding, I'm just curious.
No, actually, in 2020 we were profitable. So we did break even as soon as this hit. We broke even, and I think that's also why we managed to really raise a lot of money. Is people saw, wow, this business model really, really works. The unit economics are solid. The growth is there. Let's put some real money on this and see if we can grow it even faster. So we've really shown that the business model and the unit economics are strong.
And that profitability continues this year, next year. You're pretty confident of that, or no? Yeah.
No, we're not planning to do that because now we really want to invest, right? So we managed to show that it all works, but now we're going to invest a lot more to fuel the growth.
Got it. And so what's the end game for you guys? Do you plan to, I know you probably get asked these questions a million times, but I have to ask you. What is the end game? Go it alone, continue to grow the business. You've just gotten another capital raise. There's a lot of money out there. There's also a pretty healthy IPO market, and it's been...
Yeah, for sure.
Yeah, exactly. So how do you want to do it?
I think it's a good question. I think my answer has always been, and we're closer to something now, obviously, but really build a sustainable business, also a business that could stand alone, right? When you think about the wine market being almost $400 billion, if we get a slice of that, this could be a really big sustainable business. So, I think, someone might be interested in acquiring us. But I think IPO is something I really like at some point too.
Well, and it sounds like, honey, from what you told me is now that you've got this money, right, you said 2020 you did break even. You've shown kind of the world that we can do this. So you've got some more money that you mentioned you want to put into upgrading your product, engineering, and so on. Is that what you need ideally to kind of move the platform and the business to the next level? Because you've got a lot of users. Yeah.
Yeah, but I think it's also about, the thing about we are a global business, right? We are actually in 17 markets. The marketplace is open in 17 markets, right? Mm-hmm. We're only 200 people, so we really want to go a little bit deeper into each market there and, increase our footprint in each single market there. So I think that's very important for us.
All right, so before we go, what's your favorite wine or favorite few wines?
That's it. I've lived in California for many years. I must say I've enjoyed a lot of California Caps and Pinots, but I'm back in Europe now, so I do love champagne too. So a little bit of everything, as long as it has a good Bavino rating.
Yeah. Oh, okay. Fair enough. Hey, listen, I do. You sound really optimistic, and I don't blame you. You guys are on a growth spurt. What does kind of worry you as you look at the environment here?
That is a good question. I think, with this Corona thing going, although I'm not worried about the habits we talked about earlier, I can get a little bit worried about a recession or the economy being really, really bad, right?
Right.
Usually we say alcohol is relatively recession-proof, but, that worries me in general, not only for Vino, but also for, society.
All right, going to leave it there. And that's fair enough. And I think that, you certainly mirror what we're hearing from some other folks and CEOs that we talked to. Honey, thank you so much. Really appreciate it. Honey Zachariasen, he is the founder of Vivino, joining us on the phone from Copenhagen and just talking about their latest capital raise. And he's, of course, CEO of that company as well. Coming up next, Sound On with Kevin Cirilli. Kevin, are you there?
I'm here, Carol.
Oh, good. What do you got coming?
I'm always here,
I
Carol.
know you're busy, though, so make sure you're on the phone.
For Carol Master, I am always ready, and I'm like, let's go. What do we have? We've got Rick Davis, Emily Tesh-Sussman's going to be with us, and Congresswoman Stephanie Murphy, Democrat from Florida. You don't want to miss that.
All right, we're looking forward to it. Have a great show, Kev.
Thank you.
All right, Kevin Cirilli coming up on Sound On Bloomberg Radio. All right, everyone, from the whole Bloomberg Business Week team and Tim Stanovic, have a great and safe evening. This is Bloomberg.